Let's take a look at what we've got here. Let's take a look at, this is the Dow, nice and choppy. Sometimes when it's choppy it's hard to trade, but you can wheedle a profit out of this if you know what you're doing. Really nice wedge break down yesterday. You get rid of these chart patterns are really important. They're really key. It's not about the price, it's about the pattern really. And so we looked okay here. We had a buy signal in the Euro session. Actually, this is the typical Euro reversal period here, 10:30 London time, and everything looked hunky-dory there because we moved up from a low of 900 roughly to did 250 pips over a couple of hours, and then we just tanked. So why did we tank? We tanked because of that failure. So from the gap down high to the Tuesday Euro session, early morning, end of the Asian session, beginning of the Euro session on Tuesday. And then this was the first bar in the US Open. First bar on Tuesday. Closed lower, second bar closed lower, and we just tanked. And so what I did today was I fibbed from the gap from Friday's late night close to this Euro session low. And you can see we got very close to this 580. So we did another little squeeze to the short side here. Very deep sell into the mid-session. We're seeing some follow through now. We're just not holding at the moment. So if we now, of course, you go to the daily, it's all in the daily, isn't it? It's all priced in. You've got this structural breakdown up here with divergence. I'll put my oscillator on. Yeah, let me get a different chart up. Hang on a second. Let me just get. Let's get this. Well, let's actually get my daily up. That's easier. Makes life easier. So I fibbed this to 2019 high and low. But the crucial thing to this is it's called an awesome oscillator. It basically mirrors, I think I've talked to you about this before, it mirrors the histogram in the MACD. And we were very divergent up there. And so we had a sell signal on Monday the 17th. Spent the rest of that week poking into that resistance area, and then that decent drop on the Thursday last week, and the gap down, and the rest is history. But the clue was in these divergences. They're very, very useful to look at on bigger time frames. We had another one. Let's have a look at some other divergences. Let's look at the break up in August was a nice squeeze pattern. That wasn't divergent. That followed. We had higher highs on the stochastics and the oscillator. Where else? Let's have a bit of divergence up here. That saw a pullback to this 50-day average. So it's useful. It's a useful tool. Here's another good one up here in June last year, making higher highs in the markets and lower highs on the histogram, and the stochastics was extended to the upside. And here's the classic one, back end of 18, where we just completely rolled over. Now this is quite common. You get, there's a divergence for the initial break, then these two little spikes get sold into, and then you get you actually trend down to the histogram low. So if you can actually put a trend line on the histogram and track it when it gets down to the low there. Let me do that again more accurately. There's the low of that histogram and the low of the October histogram, and then we breach it. We get to that point and we breach it. So lots of clues there, lots of clues. Divergence is really, really useful. Even in a 1 hour chart. Let's look at the 1 hour chart. So we poked higher. Just coming to look at this. I've got my eye on this level down here, this buy signal down here. 960. I think we'll come and visit that 960 again easily. So the highs are still worth selling. Excuse me. So smaller time frames. Let's look at 10 minutes. Let me get these averages out of the way. I don't normally work with moving averages. Let me get rid of this chart a second and get another one. Let's clean my desktop up. Let's look at this one. 10-minute chart. So here's the open. What am I talking about? That's the London reversal, isn't it? Open is right up here. Pause. No, get rid of that. So we did a nice little wave to the upside. We did a 1, 2, 3 wave. Did a 4 and a little 5 and then failed. Then we did a 1, 2, 3 wave. So if the bulls are out there, this area's got to hold, and we've got to close back above 177. If the bulls are out there, if we continue to sell at this 180, 170, then we're potentially going to come all the way back down to these levels here easily. And there's your 800. I've just talked about 900, which is here. So we're struggling. We're really struggling. Just take all that off. Let's look at. So plenty of, doesn't matter. On a day like today, you could be a bull or a bear and still make money. If you're a bull, then sweep this up and take it off at resistance. If you're a bear, then just keep shorting highs. At the moment, with the markets as weak as they are, shorting highs is no bad thing. The bears caught a bigger move than the bulls. But the opportunity for the bulls is still there. Like I said, if we can just close above this zone. So I stripped all of that away. You can see how vital this area here is. We've been pivoting around it all day. So again, all around this area all day. So if where are we now? We are 2.5 hours off the close. So an ideal world for me would be for this to push lower. Come and see this support. Ideally even lower here to this support, and then get a buy signal off the lows into the close, and then wind this up. And that's good for you, Ken, given your time zone. 7:38. $9:30. Just after breakfast, you can have a look at this and see if we're holding up here, or if you've got a buy signal down here to chase this up. Otherwise, if we are very bearish and then we come to the underside here and put a sell signal here, so we'll put a sell signal in this 170 area, then you might see that drift rotate back to the trend. So in a cut long story short, it's very neutral. And the bulls and the bears are battling it out at the moment. Bigger picture, let's look at bigger picture. Here's the weekly on the Dow. We'll look at some other markets in a minute. So we got very extended up here. Three-wave move is my favorite chart pattern, all-time favorite chart pattern. There's the touch, there's the first test, and there's the third wave failure up there. And so this trend line is coming in from 1,000 pips in 2 days. Fantastic. Yeah, I wish it was this volatile every week. So you've made good money. Well done. Good for you. Sounds like you were on top of this then. You made that in, I take it you made that trading the Dow. I don't think you must have done, because the Forex has not been that volatile. Gold, you've been trading gold? That's been doing really well. We'll go over gold in a minute. What have you been trading, Ken? Yeah, so you can see this long-term trend line. This is coming in from, this is Trump's November election. This is the 2018 high and low. Oil, DAX and Dow, brilliant. Let me see, do I like that fib? Do I not? Yes, I'll stick with this fib. Hang on, just let me ponder this a moment. No, tell you what, I want to put this on, I'm going to mirror what I've got on the daily. Where are we? November. December. Right, I'm sorry, I'm just picking my level here. Yeah, so we've come back into this zone. So it's perfectly feasible that we could easily, well, we're on this, so this trend line is being tested. So yesterday's low hit that weekly trend line at 26,600 something. What have I got? 26,705 in this chart. So we could easily drop down to 26,000 before making any attempt to push back. I think we're going to continue to sell into March. My prediction is this, that we come all the way down to there. So let's have a look at these waves. One, two, three, four, five. 1, 2. So at the moment, that is our structural support. So if that gets breached, then watch out for 26,000. So at the moment, selling the highs is working a treat. Something to oil's okay. So we go back to the daily. There's the zone I got matched here. 26,360 is a major support in the daily. Interesting. I see how the volumes really, the volume was, we're coming up on low volume. There's another divergence. Okay, came up on low volume and now we're coming down on high volume. So it's a clear sign that the bears are really in charge. The bulls just got tired and the bears are well and truly in charge. So if we can break this low today, then we are in trouble. So if this is wave, let's assume for the moment that we finish this wave. Any push into that 28,000 is potentially a gift. If we get any short covering rally, at the moment we are dropping nicely in the smaller time frames. Any push into that could then see us come back. Whoops, didn't mean to do that. What I did mean to do is that. Now that could take a while to work out, assuming we do get any rally. At the moment we are still selling on the highs. We could just, this wave may not be over and we could just continue down for the rest of this week. Okay, let's have a look at, let's put that chart to one side for a moment. Let's look at some different markets now. Let me look at, God, missing is a good move. You guys trading this? Yeah, this is fibs on the Dow on a 2-minute chart using the overnight high the Asian high and or one of the Asian highs and the European low. So we've crashed into that extension and now we are drifting lower. Okay, let's look at some other charts. Let's look at You didn't. Let's look at oil because this is giving out. Okay, I have actually made money on the long side of oil, but there was a decent push up, some decent intraday moves. Yeah, we struggled at that 50-50 area, and here we are 150 pips lower. Wow, that Dow's really giving out. So yeah, I thought the pullback, everything's just selling. I thought this would hold and we'd push up. I actually was projecting we'd see 51 today, but that's a big ask in what is obviously a very bearish market. Gold. Wow, gold has done incredibly well. Now something like gold, 15-minute chart's great for gold. Can't try. I don't think you can trade gold on anything smaller than 15-minute chart personally. So we peaked at 1688. We closed the gap. And this is if you get a gap up. Let's look at the last range. You get a gap up, fib the last range, and look at the lower zones. Yeah, so given that we gap up, we backfill to support, and then we start waving down. But now, so this lower level here, 1624 is bought. So if we now break above, so we hold this area here and start closing above 1644, we could come back to the highs here. Don't trade a lot of gold. It's a little bit too quiet for me. DAX. I think the obvious thing to do with this one is just it's a 10-minute chart on the DAX. What's been working this week is if you range the German Open, and then the London Open tends to sell into the German Open. Yeah, this was actually that's unusual. The German Open has matched the London Open, so all the more reason to sell it. So we had this nice little resistance above, and then they just caved in. But incredible, they bounced it off the gap. So we came into the gap and then just bounced it back again. But currently selling off. Decent sell signal at 3 o'clock UK time. That was worth 125 pips so far. Looks lower. Yeah. Tell us about your style of what sort of setups you use, Ken? What sort of time frames do you use, Ken? What sort of setups are you using? See how important the gap is? Let's have a look at the Dow gap. Last night's close was so the gap held So they pushed it up. So surprisingly bullish open, really, given that the gap's so far away. Given the gap was relatively close. So if you turn everything else off and just look at the gap, that is that was a decent level. Where are we? Where's the gap? So I think once we did get high up here, I got most of this move to the gap. Started to trade to the upside and got stopped out, so I left it. And now they dropped it back again. Okay, so what have we talked about? We talked about divergences in, you can use divergences in any time frame, but the bigger the time frame, the better an indicator it is. Talked about the DAX with the 7 o'clock and 8 o'clock, German and London Open. Talked about three-wave patterns and projections for that Dow. Use 4 hour and 15, okay, and 1 hour and 5. Stochastics and MACD, okay. Yeah, I use a mix of those time frames as well, but with chart patterns and fibs, so not too dissimilar. Oh, I mean, let's face it, that's what anybody who's been around for a while, those time frames and those indicators are going to be basic, aren't they? It's just a question of what we do in the trading room is just got a particular, very particular style. Well, the main volume. Okay, German and London Open. Let's get the DAX back. The main volume tends to come in on the London Open, even though it's a German indice. So there are moves, but the DAX doesn't tend to get going until London opens. So if you mark off the German Open and then wait for the London Open, then you can, that's evening for you, isn't it? Then you can trade them accordingly, see which way they break, basically. So today we had, this has been happening quite a lot. If you just mark off, this is a 10-minute chart, mark off the 10-minute range. This is that's the 7 o'clock German Open, and that was the 8 o'clock London Open. That was, as you came into the session, that was resistance, trendline resistance. That was trendline support. The trend was clearly short, so sell any highs and trade it down to the gap. That's what I did this morning. Nice and easy. Any other questions? Let's go back to the Dow. Yeah, so although this Dow has had some fairly hard selling, all we're doing is coming into the London support. Yeah, 900. I talked about 900. And whoops, didn't mean to do that. And we're getting this 900 level now. Didn't mean to do that. Why am I doing that? There's the support. There's the London Open, at the London support. So all we're doing at the moment is sitting on that London support. That's all we're doing. So again, if we close above 27,000, we could get some further bursts to the upside. So we've had 1, 2, we close above here, close above that resistance, and we could get a pop back to one of those resistance. This could potentially go back to there's the breakdown area from yesterday, isn't it? Yeah, that's the breakdown area. Could go and revisit that breakdown area. In the meantime, at the moment the highs are selling, so you've made good money if you were selling into that resistance. You could, but if we do get a bounce, that could be it's getting a lot incredible volatility. God, we just had a 100 pip move in a 5-minute bar in the Dow. That's the sort of volatility we've got at the moment. Incredible. Yeah. Amazing. Put a 2-minute chart up. So we've crept back into that support area. Wow. Crazy. Any other questions? Anything you'd like to talk about next week? Ideas for a talk next week? Being right at the right time, trading mindset. Yeah, I think the trading mindset has got to be down to having a system. I think if you've got a system you trust, then the whole it doesn't become a mindset issue, because you can just, as long as you stick to your rules and do the same thing every day. It's about having a set, very specific trading system and sticking to it. If you can do that and not over trading as well. If the markets are not meeting your criteria for a trade, then don't trade them. That's how you're going to be in a better frame of mind to trade. Having a system and using that system every day and expecting the same results. There's some good books. You've probably read Mark Douglas, Trading in the Zone. I've got another book. I'll send you the title. Yeah, you got, if you can cut the emotion out. I think another thing is, don't try and trade every move. This thing's waving up and down like crazy, so you're gonna go mad if you keep trading everything here. That's one thing. Another thing is to keep your mindset a bit clearer is avoid trading mid-session. So the markets tend to, both the Dow and the DAX, or every market tends to make its mind up about 30 minutes after the market's open. That's one key point. And you get a lot of volume coming into the market in the last hour. So if you avoid all the mess in between, that's one way you can keep control of your emotions. And yeah, have a system as we mentioned. My favorite indice is the Dow. I do trade the DAX, but I trade it. I'm very choosy about when I trade the DAX. The answer is no. You know, Ken's saying if I saw a move on all the indices, would I take them all? The answer is no. It's much easier to stick with the market you know best, and the Dow's the market I know best, and that's the one that I mark up and stick to. So I much prefer that. Yeah, and what sort of I mean, see, if you mention trading mindset, which is, you know, a really hot topic and something we all need to keep tabs with. You simply just double the pips, right? Okay. Yeah, I mean, if any specific emotional issues you got with trading, or was that just a general point? That really was quite a nice breakdown today. Okay, well, listen, I need to get away from these screens. But this is, you know, if you strip the fibs away and just look at the price action in relation to that zone, that's another, it's when it was selling. So you get a sell signal up here. That starts to roll over. So you've got a couple of trades there. So if you didn't bother with the open and just mark this up later in the afternoon. What was this? This was 4:30. This was 2 hours after the Dow had opened, wasn't it? Okay, well, thanks for joining me again, and yeah, we'll have a chat next week. Unless you've got any more questions, I'll shoot off. Thanks, guys. I'm going to go and grab something to eat, so I'll see you soon. See you next week, if not before. Bye. Yeah, I'll send you the recording. Yeah, no problem. Thanks again. Bye.